Hi, Borana. Today I'd like to talk to you about what investors should be doing in a year like 2022, where we've been experiencing a lot of volatility and market downturn in equities. My question for you today is, what are three of the biggest mistakes new investors make in a market downturn?
Hi, Shannon. Thank you so much for taking the time out of your day to film this quick video. That is the key question for individuals that are especially new to investing and may be experiencing volatility for the first time in their investment career. So the three biggest mistakes that investors should avoid in a market sell-off is: one, do not panic sell. In many cases, investors feel emotions that urge them to sell in a panic because they're afraid of losing their money. It is in our human nature to run and panic and hide when we feel afraid, but studies have shown that some of the biggest positive day returns in a market actually happens during periods of high market volatility. So you do not want to miss out on those up days. Just to give you an example, on March 24th, 2020, during the COVID market correction, the S&P 500 went up 9.4% in that one single day. So for those investors that panicked and sold their investments during that correction, they probably missed one of the most positive day returns in the market. So if you are feeling anxious, call your financial advisor and review your investment and investment strategy. The second biggest mistake to avoid is do not try to time the market. Market timing is when an investor attempts to make trades at the exact time that the market will turn. No one has been able to demonstrate that they can do that successfully because no one can predict the market and no one has a crystal ball. When an investor pulls their money out of the market, they run the risk of missing out on gains if the stock market continues to go up. The third biggest mistake that investors should avoid in a market sell-off is do not obsess over your daily account balance. Keep a long-term perspective. Don't forget about the big picture, your long-term goals and objectives, and your strategy for achieving those goals. Work with your financial advisor to have a well-researched, diversified portfolio and plan that will meet your expectations, your risk tolerance, and your time horizon.
Thank you for that answer, Borana. So what is one thing that new investors should do in a market downturn?
That's a good question. So the biggest do in a market downturn is to be opportunistic and consider taking advantage of the sale prices that the market is offering. I am sure you have heard of the term buy low and sell high. Investors might consider buying more at a discount of fundamentally sound and well-researched investments that have been overpriced over the past few years.
Thank you, Borana. If any of our viewers have any questions they'd like to ask, please visit our website at www.lifestagewealthadvisors.com. And thank you for watching LifeStage Financial Education YouTube channel.
Thank you, Shannon.